Bitcoin was created in the aftermath of the 2008 financial crisis with one major reason, and that is to create a peer-to-peer electronic cash system that is decentralized and is able to be the alternative to our broken system. It has to be cheaper, it has to be faster, it has to be decentralized, but I argue that Bitcoin actually failed to do just that. In this show, I'm going to explain to you exactly why I believe Bitcoin failed to be a peer-to-peer electronic cash system. I'm going to show you what Bitcoin is, in my honest opinion, and I'm going to bring you some alternatives as well. There's a billion ways to make money in crypto, and I'm on a mission to find them all. And also, I'm on a mission to understand everything and boil it down so you can understand it too. My name is Fefe, and if I find anything, I share it with you. So if I make money, you can make money too. If that sounds good, subscribe to the channel, smash the like button, make sure to follow me on X for daily alpha. Let's jump into the show. Now, in the white paper, you can read the promise of Bitcoin clearly, as it says, a purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. Basically, it is a peer-to-peer, from person to person, electronic cash system without any central authority that is fast and that is cheap. Now, 15 years later, Bitcoin is widely known. There's over 100 countries that allow transactions in Bitcoin, and some countries even adopted it as a legal tender. Obviously, El Salvador is the notable example. And as a result, over 15,000 stores already accept crypto payments directly. Now, the question really is, Fefe, if this is true, and 15,000 stores accept Bitcoin, and we've got ETFs, and we've got adoption happening, why do you think that it failed as a peer-to-peer electronic cash system, which it was aimed to be? There are several issues and there are several things we have to look into. Let's go. Let's start with one of the smallest issues, transaction fees and high transaction fees. And before I even say, I know what you're gonna say, but Fefe, oh my God, Bitcoin is very cheap to send if you wanna send large sums of money, and that's right. But you still pay about $1.50 per transaction. Now, if I want to create a peer-to-peer electronic cash system that everybody uses around the world, and I can spend maybe $30, $20, $10, paying $1.50 transaction fees on that as a minimum is actually quite high. And it's no wonder that there are a bunch of different crypto projects that already do transactions much cheaper for a fraction of the cost natively on chain. Solana, for example, our favorite and beloved meme coin Degen Dungeon, charges $0.0025 per transaction. Ripple, 0.002, or even Bitcoin Cash charges $0.01 per transaction. Now that shows exactly that although Bitcoin is cheap if you want to spend large sums of money, there are much better solutions out there already that are alternative cryptos to Bitcoin that do the exact same thing for much cheaper, even when you spend a smaller amount or transact in smaller volume. Now, to add more, due to the increased network demand that is happening, and we're not even the peak yet, Bitcoin has experienced big ass surges in transaction fees. The latest one, for example, in 2022 August, when it rose by 937%. Again, it's not substantial if you look at the fact that it went from about $1 to about $8. But if you would have to pay $8 in fee for a coffee you buy for $8, you would not be happy. Talking about coffee and buying and spending, let's go into the next point, which is slow transaction speed and finality. Finality, I'm going to explain a little bit later. Now, if we want, again, a peer-to-peer electronic cash system, we want to be able to use it with ease, like simply. I'm talking about swiping your card, touching your phone, touching your watch kind of ease. Now, I don't know if you've ever tried to pay with Bitcoin, but it's kind of difficult to use Bitcoin as a payment solution for day-to-day stuff. Bitcoin uses something called the proof of work protocol or proof of work system that is basically Bitcoin mining. Now, Bitcoin miners use these very powerful devices to crack a very difficult complex mathematical puzzle, and when they crack that, then a block gets added and then the transaction goes through. I know it's kind of confusing, but what you have to understand from this is that it requires, first of all, a lot of energy, second of all, a lot of time to crack these codes, to crack these mathematical puzzles, and to actually complete transactions on the blockchain. Now, there are two aspects we need to talk about here: transaction speed and finality. Let's talk about transaction speeds first. Now, as I said, to crack these mathematical puzzles, the miners need time, or the system needs time. It takes about 10 minutes for a block to be completed and be put on the blockchain, but can be all the way up to 1.5 hours or even more, as we'll look at examples later. Now, this means that it's not great if you want to use it in an emergency situation. Let's say I want to send you some money because you need it right now. If I need to wait even 10 minutes for it to confirm and for you to be able to use that, that's a long time, where I can just use PayPal PayPal or any other crypto with a speed of light. Click of a button, it's on your wallet or on your phone. Now you might be arguing, yes, but you can speed up transactions, but by speeding up transactions, you're paying higher fees, which again goes back to the first point of high transaction fees. Now there's one more thing when it comes to speed and transaction speeds, and that is network congestion. So as there are more pending transactions, more people want to spend and transfer Bitcoin from one place to another at the same time, there can be congestions on the network. On an average, we can say that Bitcoin can handle about 3 to 7 transactions per second. Now, on the other hand, Visa claims to have a capacity to execute 65,000 transactions per second. That's a huge difference. And it is needed. If you look at the statistics from the United States in 2023 alone, you will see that there's 53.8 billion transactions have taken place for an average of 147 million per day, or 6.50 million per hour, or 102,000 per minute, or 1,708 per second. Now here's my question. If Bitcoin can facilitate 3 to 7 transactions per second, and only in the United States there were about 1,700 transactions per second, how are we going to use this as the global currency around the world? And if you've been here long enough, like class of 2016, 2017, like I am, you remember this, because in 2017, we had 115,000 transactions pending for confirmation on the Bitcoin blockchain, amounting to over $700 million that was stuck for over 1.5 days. So speed and scalability is definitely an issue. But I promise you, I'm going to talk about finality as well. Let's talk about it now. So finality is, in other words, a point from which a transaction cannot be altered, modified, speed up with adding extra fees, or reversed. It ties into the transaction and speed of transaction kind of thing, but it's very important to talk about actual confirmations when it arrives and when the transaction confirms for the merchant you want to pay with Bitcoin. So Bitcoin's blockchain finality, again, the point when the transaction is confirmed and actually added to the block, is relatively slow compared to all the other cryptos. It takes about 6 confirmations, which can last up to 60 minutes. Also, during this period, the transactions can be tampered with before the final confirmation. Now, it's not easy to tamper with, but it's not impossible. We actually tamper with it every single time when we increase the fee to speed up our transaction. Now, going back to coffee, imagine a situation when you buy a coffee at Starbucks. Bitcoin's slow finality basically means that you would have to wait an hour for the transaction to confirm for the merchant, and they would be able to say, okay, so it actually arrived, you can leave now. So that means for a low value purchase, like a coffee, this delay is absolutely impractical and basically impossible to carry through with. And of course, you could argue that, yeah, but the transaction already shows up and the confirmation shows up that it will arrive at some point, but they're still not able to use it. On the other hand, there are multiple competitors and different projects that offer much better finality. For example, Aptos, where the finality is under 1 second. That means I can literally click on a button and the one behind the counter receives it immediately and we go on our business, just if I were to pay with my credit card. Or actually, in the case of Aptos, for example, a little bit faster. And to put a cherry on top, let me talk about entry barrier and the high entry barrier into paying with Bitcoin. Now try to remember how difficult it was for you to enter the space. First of all, to understand the concept of self-custody, opening a wallet, downloading a wallet, keeping your seed phrases, depositing money to an exchange where you do KYC, and then you send back money to your wallet, and then you can use that wallet to pay, but then you have to scan the... It's just a madness. It's very difficult to follow through with. My grandma could not do it, simply could not do it because the tech is not there. So if we want a peer-to-peer electronic cash system that is used by millions and millions and hundreds of millions around the world, it can simply not be on a self-custody wallet that you have to download, that you have to keep the seed phrases of. It's just not where it should be. And again, you can argue that there are solutions already out there which allow Bitcoin transactions as well. You can look at smart wallets and much more. Sure, but that has nothing to do with Bitcoin specifically. Just like layer 2s. A lot of people might argue that, oh, but there are layer 2 solutions that actually solve all these problems. For example, in the Lightning Network. Yes, but it's not native. There are security risks in the Lightning Network. It is complex. It could be much more centralized. It is not, there is no consensus on chain, and there are not enough payment routes. Now, this is all what's wrong with Bitcoin. The question really is, what is good with Bitcoin and what can it be? What can it transform to be? And what I believe Bitcoin is already or is going to be. Before I jump into that though, I wanted to give you an alternative to Bitcoin that actually is a peer-to-peer electronic cash system that is decentralized, is cheap, is fast, is easy to use, and is adopted by over 30,000 stores worldwide. Now, they are a project called 𝗏𝗡𝗏, and they are our partners for the show. Now, as you know, I only bring in sponsors and partners to the show that I genuinely, truly believe can bring value to you and me and to the world in general. Now, 𝗏𝗏𝗏 actually solves most of BTC's issues when it comes to day-to-day transactions. Now, they aim to do exactly what Bitcoin was supposed to do, or was supposed to be, a decentralized payment system. A system that can be used by millions or even hundreds of millions of people that don't know about crypto. It is fast, it is cheap, it is scalable, exactly like I said, just swiping your card or touching it to the card reader. When it comes to this project, in my opinion, it all comes back to mass adoption, right? How fast can you go? How many shops can you get into? How many people will use your platform? Now, 𝗏𝗡 has a browser extension, a web app, a mobile app, and you can do everything in the application. You can deposit your 𝗏𝗡 tokens, you can swap it to USDT, you can swap it to Bitcoin, and you can use it to actually pay for real stuff. The best part is you can actually do it without having your identity on, so it's basically no KYC. Their app is very similar to Bitcoin's app. It's basically a self-custody wallet. You have control over your own assets. Your wallet is protected with your keys or your seed phrase, and you basically do whatever you want with it. You can transfer in and you can transfer funds out. As I said it a million times, there are a bunch of projects that don't really do anything. They don't really have a working product. They don't have customers. That's not the case with 𝗏𝗡. One of the main reasons why I actually love and actually invested in this token is because they have over 30,000 stores worldwide that are accepting 𝗏𝗡 tokens right now as payment. Now, you can locate these stores by simply going to their website, scrolling down here, and you will see the map. If you can see, obviously in the United States, they've got a bunch, but if you go here back to Europe as well, you will see they have, even in smaller countries like Austria and Czech Republic and Hungary, you see that they have a bunch of stores, which is quite crazy to think. Now, one of the reasons why they're available in so many places is because they designed it in a way that they offer easy to plug and play solutions for e-commerce platforms like WooCommerce or Shopify. You can simply just take it as a Shopify owner, plug it onto your store, and immediately start accepting 𝗏𝗡 tokens. And you might be wondering, yes, but what company would actually take a project token called 𝗏𝗡, which we never heard about? And that's the cool part. They have something called OASIS, which is Open Asset Swap Interaction Scheme. That's a long one, but that allows merchants to immediately convert their 𝗏𝗡 tokens into stablecoins like euros and US dollars and much more. And therefore, businesses don't take the risk of holding 𝗏𝗡 tokens if they don't want to. Now, I heard about 𝗏𝗡 a long time ago, but they were not working. It was not a working product back then. It was just an idea, another promise, but it seems like they are pulling it off. And this is why I'm very happy to talk about them now as well. Now, they have a game changer coming because they transitioned from proof of work to proof of stake to be more sustainable, to be more fast, and to allow staking and yield earning for their people, for their community. The proof of stake is called Albatross. Now, this is a proof of stake consensus algorithm, which means that it basically eliminates all the disadvantages of proof of work, such as slow transaction speed, low finality, high electricity consumption, higher transaction fees. All that is gone with proof of stake. Now, because it's proof of stake, they have a pre-staking campaign. Obviously, they want to onboard people and want people to know about 𝗏𝗡, and they want to reward them as well. So not only the fact that if you stake your 𝗏𝗏 on their platform, you earn a 15% APY, but now you have the opportunity to actually gain extra rewards by being an early adopter or early staker. So they put up a 200 million 𝗏𝗡 token reward base or pack that is basically around $300,000 at current prices, which is quite substantial. Now, 100 million of that goes directly to the people who actually do pre-staking. The more you stake in the pre-staking period before November 10th, the more points you accumulate and the bigger share you are going to get of the 100 million 𝗏𝗡. And then there's 100 million 𝗏𝗡 on the side, which is for people who complete tasks on their website. Let me show you. So there's a link in the description. It's definitely worth checking out and reading through, but I'm going to give you the TLDR. So if you look at this, everyone wins with 𝗏𝗡 pre-staking. That means that they have an allocation for people who complete tasks on their website. I'm going to show you that in a second. But also, if you just participate in the staking and you lock your tokens and you earn 15% APY, you are an early adopter and in the pre-staking period, and therefore will get a cut of the 100 million 𝗏𝗡 token pre-staking rewards. Obviously, the more you pre-stake, the bigger your cut is going to be of the 100 million 𝗏𝗡 token. I'll show you how to lock your tokens in a second, but if as you go on, you will see that you will be able to connect your wallet here. You will have multiplier for pre-staking. You will have multiplier with staking with an underdog, which I'm going to show you, and you will also gain extra points for completing tasks and much more. As you see that here, there will be giveaways, 3 million 𝗏𝗡 tokens to 10 winners, 1.5 million to 25 winners, and 500,000 𝗏𝗡 tokens for 60 winners. You can find much more information about it let me show you how you can actually stake your tokens. So once you open your wallet, again, there is a link in the description. You will find everything. You will be able to land on this page. You can buy NIM tokens on multiple platforms. For example, if you go on to CoinMarket, now if you go back here, you buy your tokens on there and you may need to withdraw your tokens into your Nimiq wallet. You click on receive. After you open up your wallet, you click on receive. You have this funny looking wallet address, which is quite cool. I've never seen this before. Or you can have the QR code. You scan it from the exchange you withdraw to, you withdraw your tokens and they will show up here. Now, once the tokens show up here, you can just simply click on pre-staking. It will give you all the TLDR. When you click on let's go, then you can pick your own validator. You can pick one and then you can pick the amount that you want to stake. You can click on confirm pre-stake. You have to enter your passcode and you're basically done. Then it already tells you that you have to claim your points. I'll click on claim my points. It will scan my points and add it to my dashboard. Now, again, I believe looking at the fact that they have 30,000 shops almost and they have a working product and great finality, great transaction speed, great number of transactions per second, I think this really can be an interesting project. There is a link in the description. Check them out. And if you want to participate and get the rewards, you need to make sure to do pre-staking before the 10th of November. And we talked about what Bitcoin aims to be and is, in my opinion, not. We talked about what an alternative is. But the question really is, if Bitcoin is not a peer-to-peer electronic cash system, does it really have future? And what is Bitcoin really? Well, for one, in my opinion, Bitcoin is digital gold or a store of value. Now, you might be saying, how can it be a store of value and digital gold if it has massive volatility? We've got 75% drops, 80% drops every 4 years. How can that be sustainable? Well, it might have volatility in the beginning. If you look at gold back, I don't know, 5,000 years ago, probably gold had the same volatility. But if you look at the historical chart, you will see that even though Bitcoin was extremely volatile, it actually outperformed gold by a lot. And since its inception, since 2009, 8-9, it has entered the top 10 asset classes by market cap, which is huge. Now, there's one key difference where I don't like to call Bitcoin digital gold, because gold can be mined as much as we want. And if there is an asteroid, which we know exists, with a bunch of gold, tons and tons of gold on it, then the gold supply gets diluted and gold loses its value. But we know for a fact that Bitcoin only has 21 million Bitcoins, and roughly 10% of that is already lost for lost wallets and bad transfers and whatnot. That leaves us with about 19-20 million Bitcoins total. That's it. Now, the record shows that is about 212 tons of gold mined throughout the history. And if you use the current population of about 8 billion people, that gives about 0.83 ounces of gold per person. On the other hand, if you take the 21 million Bitcoin, let's not account for the one that are already lost, that gives about 0.0024 Bitcoin per person. Therefore, only if you look at this math, it's much more obvious that it's much more scarce and much more valuable to own Bitcoin than to hold gold. And the other reason what I believe Bitcoin is going to be or is a hedge against inflation. And again, going back to store of value. Inflation is basically the rate of prices of goods and services increase. Now, if you're putting your money into a bank or into a saving account with 5% APY or 10% APY, you will lose to inflation because there is higher inflation. If you look back only in the past 5 years, 10 years, there's higher inflation than the yield that you can get on your own money from the bank or from any institution. If you study the relationship between Bitcoin and inflation, you see that there is a clear uptick in the price of Bitcoin when there is an inflation shock, which means that Bitcoin is an obvious hedge against inflation. Now, again, I just have to go back to the fact that you have 21 million Bitcoin total in the world. And again, some of it is already lost. Now, if you have something scarce here that you can own and you have dollars and fiat money that they can print out of thin air without any central authority or any authority that we, the regular people, could argue for, there's no other alternative or better alternative against the devaluation of your fiat currencies than to actually own Bitcoin. And now we see that the world is waking up. So we see the ETFs coming in. We see Wall Street getting involved heavily. We see governments talking about, even Trump talking about a potential Bitcoin reserve. We do not understand what's coming. And what's coming for Bitcoin is not a day-to-day transaction where you and me can buy a coffee in Starbucks, but it is a store of value, a hedge against inflation, an asset that you can hold, basically hold the key to your wallet in your head and hold millions or hundreds of millions or billions of dollars in your head. It's easy to transport, it's easy to store, it's very cheap to send if you send large amounts, and therefore serves as a fantastic store of value. And this is my conclusion why Bitcoin is not a peer-to-peer electronic cash system, why it failed to be, and what it transforms to be, even though that's not what Satoshi envisioned at the very beginning. Guys, if you like this show, please make sure to subscribe to this channel. Make sure to like this video, share it with your friends who might appreciate to see it. Leave me a comment. I really want to see your thoughts, hear your thoughts. What do you think about this? And if you want more alpha like this, not only weekend shows on the channel, but also every single day, make sure to follow me on X. I drop daily alpha, trades, money-making tips, and much more. You can find my link down in the description. Thank you so much for watching. I truly appreciate you, and I believe I'll see you in the next one. Take care.